Welcome back to U.S. Farm Report. This weekend, time to talk markets. Well, corn and soybeans, even cotton, seeing a little life to start the year. Some good news. We have Dan Basse as well as Mike North joining us. Dan, I want to start with you. Is it simply because we were oversold, or is there a more fundamental reason at play right now in these markets to start the year?
You know, at time, I think it's been the $1.30 break in soybeans that, having wheat prices at 10-year lows and then some people looking for areas that they want to make an investment, and commodities seem cheap relative to the stock market. So we've seen a little inflow into the commodity space. It's given us a bounce. Fundamentals haven't changed. They're the same as they were last year. But as we look at the markets here today, a little bit of levity as we get some short covering heading into Monday's report.
Yeah, well, Mike, USDA confirming more soybean sales to China this week. According to Reuters, they're now approaching 10 million metric tons. So we are getting closer to that reported 12 million metric tons. Is that enough to continue to support prices here near term, Mike?
Well, I think the ongoing sales have been enough to catch the break that we saw coming into the new year. And, frankly, as we look at sales, this is a market that it needs them. And you saw the market explode on the talk of it. Obviously, the market broke in the absence of it. So the fact that they're coming in will provide some support here. But I think, as we talk about the bean market in general, it really lacks a really good story to give it new direction and new life. If you go back to Jan 1 of last year, looking at the March bean chart specifically, we've only had 75 days where we've closed outside of the range from 1030 to 1080. And so that speaks to the very quiet nature of this market, and that'll continue without something new. So we might be able to hold it against the bottom of the range, but it's not enough to propel it to something way outside the range unless we see a big, robust sales period.
Well, Dan, we do have the January crop production report coming out on Monday, grain stocks at the end of the month. Is the expectation for either of those to be bullish or bearish?
Well, the hope is that the market will see a drop in yield. The average trade estimate is for a 2 bushel an acre decline in corn, about a half bushel on beans. And so the market is leaning in because of last year in terms of what the report will say. That being said, when we've got these large crops around the world, Brazil, Argentina, the Argentinian wheat crop, which is now being marketed at roughly 70 cents cheaper than Gulf corn. That's a 10.5% protein crop. But as we think about this, we still have too much grain, and I'm not sure the report on Monday is going to change all that. If we do get a bullish reaction, my advice would be farmers need to be looking at making some sales.
Yeah, so that was going to be my next question, Mike. Then how should farmers prepare, knowing that we have possibly this big report? Well, it is coming on Monday, and depending on the reaction, and then also another big report at the end of the month.
Yeah, so as we look at this yield issue that Dan pointed out, if you were to subtract 4.5 bushels, it takes your stocks to use back to 10. 10 is kind of the magic number to give any sense of explosiveness to price. It's in that environment you can see market movements back to $5-6. But for us right now, as we look at that potential 2 bushel decline, it's just not enough. It could provide a little bit of powder for us to take us back up into maybe something like 480 or otherwise. So we're being more defensive and using option strategies to try to protect as we go through that report, and even beyond that, because let's face it, at 12.5 stocks to use, you can ultimately still see this drift lower without any good stories to tell.
Yeah, when you look at a story, really keeping a close eye on South America right now to keep production time. Dan, Argentina now seeing some rains this week. When you look at Argentina and you look at Brazil, how big of a crop could the South American crop actually be this year?
Well, I've got a team on the ground in Mato Grosso with the Bank of Brazil right now. We are doing our crop survey across Mato Grosso, and then we'll shift southward over the next 6 weeks. But as we are getting yield data from Mato Grosso, it's pretty big. We're seeing yield data that's record large, about 9% above last year. So, all of a sudden the talk of a 181 to 185 soybean crop in Brazil is potentially possible. Of course, we need good finishing weather, another 2 or 3 weeks of rainfall. But, things look good right now, Tyne, and we're optimistic that we've got 180 something. We just don't know exactly what, and that all depends on Mother Nature for a few more weeks.
Yeah, well, Mike, speaking of South America, Brazil, Reuters reporting this week that Brazil is surpassing the U.S. as the top beef producer. Mike, is that a surprise, or have we been expecting that this year, considering the contraction in the U.S. herd?
Well, livestock industries depend on the availability of feed, and let's look at the track record. They're continuing to grow bigger and bigger crops each year, and as we look at their exports, yes, they've become a growing partner to China, especially in our absence, but they have enough there to also feed a growing livestock industry. And so the writing's kind of been on the wall as they grow more and more soybeans and then backfill that during the second crop with more and more corn. And so the gates are open, and they walk through them. And so this doesn't come as a shock. It'll be an interesting thing to see what they do as those cattle leave the feedlot, go to processing, and whether or not they can meet all the phytosanitary concerns that the world demands as that meat leaves the country.
Yeah, Dan, where are their exports going? Is that becoming even more of a competitor for us as well?
Well, they are. They're going to places like Europe and Southeast Asia. The cattle herd in Brazil is rapidly building. And I think longer term, because of the drop in tariffs from the Trump administration, that beef will be a solution to helping us out here in the United States. Now, it's still a little early, but as you look at Australian and Brazilian imports of beef, it is going to be something that will keep this market under the high that we scored last October. Feeder cattle market are getting closer to it because people are still optimistic. I'd be a little careful here on feeders, but as I think down the line, I'm becoming less bullish of cattle just based on imports. However, screwworm is something we'll have to deal with as we turn the page to April or May of next year.
I mean, Dan, you've been pretty bullish, so that storyline has changed a little bit for you.
It really has. Ty and I've been bullish for about the last 4 years. I still see protein due to Ozempic and all the demand that will be forthcoming, but I'm starting to see where there's some solutions to the tightness in the beef market in particular. And so as we look at the dairy herd and we're keeping back numbers, as we're seeing more cross calves being produced by the dairy industry, as we're seeing, the expansion of imports in the United States, my outlook is starting to now be a little more neutral, or let's say in a wide swinging market. So I think we may have made our historical highs in October, but again, let's give it some time here. But I need to have the inventory report get behind us later this month, and then we'll take a view on where we're going. But I'm starting to tilt now to a more neutral level in terms of the bullishness that I've held for the last 3 years.
Well, Mike, speaking of protein, that's really at the center of the discussion this week as they unveiled a new food pyramid and dietary guidelines that's putting protein back at the top. So you look at beef, you look at dairy, those were all winners this week in those new dietary guidelines. Is that something that you do think will significantly shift demand?
Over time, yes. It's not an immediate shot in the arm, but we have a perfect guideline now to train consumers to look at fat and protein very differently than they have in the past. And so as we talk about dairy products, as we talk about animal proteins, this is an opportunity as we move forward. But it starts with our youth and then walks forward over time. This is not going to be an instant injection because people are creatures of habit, and we have to train them to think differently about these things. No different than when we came through the 80s and the low-fat, no-fat universe that we all grew up in. We have to shift that back to fat's okay, and it's actually good for you. And protein is a staple to good health. And as we train people to think this way, we will see increased demand over time, and that'll take per capita usage rates on all of these fronts to higher levels.
Thank you, Mike. Thank you, Dan. Well, how deep is the farm crisis? Some farmers are saying adios to acreage and walking away from farmland. That's in Chip's Corner next.